welcome to this very special episode of What Lies Ahead, India Sparkling, a Diwali special. And first of all, here's wishing all our viewers a very happy Diwali from Nikunj and me.
A very happy Diwali indeed. Last 1 year has been a rewarding year for Indian stock market investors. For Samvat 2068, Indian markets have appreciated by 10% plus, and for the year, Indian markets are up 25%. But is this as good as it gets, or Samvat 2069 will be as rewarding as Samvat 2068? Let's discuss that with our three wise men: Hiren Ved of Alchemy Capital, Nilesh Shah, Envision Capital, and Shankar Sharma, someone I guess who needs no introduction whatsoever. Hiren, let me start with you first. The script of how Indian markets have moved for last 1 year was largely dominated by two factors: global liquidity and news flow from New Delhi. What, to your mind, will influence the script for next 12 months?
I think, pretty much the same. But I think that incrementally from here, what New Delhi is going to do is definitely going to be very, very important. Because we've already recovered from the lows, and for the markets to now go up from here, I think you would require interest rates to start coming down and reforms to accelerate. So I think that if you get these two, and if the global markets are still constructive in terms of liquidity, then maybe you have a good portion as far as Indian markets are concerned for it to go up.
Shankar, we've evaded a ratings downgrade. We've done our bit what we had to, but the point is, what next? Is the market going to watch out for whether or not the reforms are implemented as stated? What's going to provide the next push?
I don't understand what you mean by reforms here. I mean, how is FDI and retail so material to the future or the next 6 months in the Sensex, or even the next 2 years in the Sensex? I think the whole word reforms has been just become sort of a proxy for foreign investment. I don't think the two things are absolutely the same thing at all. It is what the country requires is really grassroots level changes, which don't necessarily impact the stock markets, but they really impact the lives of common citizens. If you do that, this country is good enough to take the markets wherever they're supposed to go, which in my view is up. That government has been doing, but no, that's not sexy enough, so nobody focuses on that. So the UID implementation, which is now very advanced, you're already at the cash transfer stage, which will, in my view, cut a lot of the slack over time in the subsidy part of it by cutting out bogus recipients. A lot is being done even as we speak right now. Now, if you talk about reforms in the narrow sense of FDI and retail and aviation and insurance, I don't see how those things are so material to the future of the average man on the street. Be that as it may, the government has done that. Assuming that they deliver even moderately on actual implementation, it will still be at the margin good for the market. But I am saying irrespective of that, the markets are going to go up. They were already up ahead of that itself. If this had not happened, the markets would still be up. Because I think the macro numbers for India have bottomed out. I think the real problem in India, I've said this many, many times, is Subbarao. If we fix that mindset of his, I think you've fixed a large part of the problem. I don't know whether it's fixable or not. Assuming that he's now said in January we will see some action on the rate front, which I find a little bit strange. That why would you want to sort of broadcast that out to the world well ahead of the actual event? But assuming that it delivers on that, and subsequently, I think markets are looking very, very good. I don't see what can derail this particular bull market in India.
Nilesh, is that what the market wants? A rate cut?
I clearly think so. I think market is looking forward to that. And clearly the reality is that we've seen the bottom line growth to some extent getting capped because of the interest rates where they stand today. And in fact, even if you look at the September quarter numbers, they clearly indicate that the operating profits are reasonably good. We're still growing at about 14-15% in terms of operating profits. But what's really kind of capped the net profit growth is clearly the interest costs. And I think interest costs are not just good for corporate profitability, but I think apart from a whole host of other factors, is an important catalyst to basically bring back the investment cycle and kickstart the investment cycle. Of course, that's not that a 100 basis point cut is going to drive the investment cycle, but I think it's going to be an important variable to catalyze the investment cycle.
So Nilesh, markets are up 25% this year. They are up 10% in between Diwali. For investors who have missed on this year's rally, how exactly they should plan their portfolios now?
Well, clearly think that first is really not to be too fixed with the Nifty or the Sensex levels, because I think when you do that, clearly I think you really don't, you're not able to identify individual opportunities. So I think clearly the first thing to do is that, well, the Nifty, Sensex might do what they have to do, whether they're up 10-20% next year. But I think to really get into individual sectors or individual stocks, because that's clearly where the returns come from, that's clearly where the alpha comes in. So I don't think it's late for investors. I clearly believe the best for India is yet to come. May not necessarily be just 2013 itself, but even maybe beyond that. So to that extent, I don't think investors are late, and I still think there's a long way to go.
Hiren, is that how the next 1 year is going to pan out when we talk after the next Samvat, where the index stays in a 10-20% band, range bound, and individual stocks giving you 50-60% returns?
Well, actually, surprisingly, I was just looking at the numbers. If you take year to date, Nifty must be up 20%, but there are at least 8 to 10 stocks which are up more than 40% in the Nifty itself, right? So I think that every market gives you an opportunity, in a particular context. So I think 1 year down the line, if we see a situation where hopefully, as everybody said, Subbarao, cuts rates and, you have lower interest rates, you will see a certain set of stocks which will do dramatically well. But I do agree that I think looking at the Sensex and Nifty and then trying to, decide whether you would want to invest or create a portfolio is not really the most optimal way to do it. I think, the way I would look at it is that, I mean, I know there has been this great debate all over, we've had one end of the market which is very expensive, you have another end of the market which is very cheap, so how do you position yourself? And I think that the reality is somewhere in between. So I think what you have is good P&L, good balance sheets, and the markets have rewarded them with good valuation. On the other hand, you have bad P&L, broken business models, broken balance sheets, and the market has rewarded them accordingly. But I think that there is increasingly an opportunity in middle, where you have a good balance sheet, but you may have a bad P&L because cyclically that sector is not doing well. And if you believe that hopefully things will start to, do better. For example, Maruti did not have a broken balance sheet, but there was a problem with the P&L because growth was slowing down, they had issues with labor, so on and so forth. And now we are seeing that the volumes are coming back and the stock is up 40% year to date. So I think that the opportunity is going to come where investors can identify that if one of the two was impaired, whether it was the P&L or the balance sheet, and incrementally from here on, that is going to be addressed. I think that's where there is money to be made.
Since you've done your homework on Maruti, I would imagine you like Maruti.
Yes.
And why do you like Maruti?
No, I think it's the same case. I think that if you really look at it, India is selling 2 million four-wheelers today. And China today, China 10 years ago used to sell exactly what India is doing today, 1.6 to 2 million vehicles in 2000. Today, China is the largest four-wheeler market, right? I think if you look 3 to 5 years down the line, India will probably start doing 8 million, 10 million four-wheelers. And I think in India, one thing is unique is that in several market segments, you have companies which have 40-50% market share. Maruti, 45% market share. United Spirits, 50% market share. United Breweries, large market share. Titan, the highest market share. So I think you have in India a set of companies who have large market shares in each of the individual segments. And if we think that consumption is going to grow, which it is going to, because we are still a $1,500 per capita country, then I think there's a lot of money to be made. I think as interest rates cycle correct itself and as volumes pick up, I think, companies like Maruti and several others in their respective sectors will do phenomenally well over the next few years.
And you talked about United Spirits, so I have to toss it over to Shankar. Shankar, you believed in the fundamentals of the company. When we chatted earlier, you were like, deal or no deal, I am bullish on this particular stock.
I'm not a fundamentals guy. I mean, so this whatever he's talking about is absolute Greek to me. The broken balance sheet, broken business model. I don't understand. I like a stock price. I mean, I don't like stocks. I thought it was a great stock price of 700 or 800 rupees. I thought either way the stock had to double or triple. Whether Malia defaulted or it didn't default, it was a very straightforward trade. It's rare to find such trade, but you found one, and that was about it. But then if I start to philosophize about the great stuff the Indians are going to drink a lot, that's all okay, but my horizons are not that far. I mean, I'm already about to turn 50 in 6 months' time. I have got 10 useful years of life left. I have to make money now. I can't buy a 5-year story. So my view is, a 5-month story is what I like. It was a great 5-month story. I bought it and I made money. So,
which is the next 5 month story?
And now you're out of it.
We'll see.
So which is the next 5-month story then?
Well, they don't come that often, unfortunately,
Okay.
But, you always get to know of that.
What's on your radar?
Look, I don't spend too much time on this. Unless something comes and sort of hits me in the face, which is what my criteria is, that it has to become such a big no-brainer. Maruti was one such case at the beginning of the year. Labor problems are not a permanent problem in any kind of company, unless you're Metal Box in Calcutta. Other than that, you will get out of it one way or the other. It was a no-brainer at 900.
Nilesh, do you think the polarized nature of this market is changing now? If I look at the Nifty performance for this year, it's Ultratech Cement, followed by L&T, and then right at number 3, you got IDFC.
Yeah, I clearly think that that is something which will continue and will be the case like that. I mean, unless you have, a single sector specific bull market like the way we had maybe in 99, 2000 or maybe 2007, 2008, where one sector outperformed significantly. But if you still look at the big gainers in the Nifty or the Sensex, they're right across. You have, of course, cement, which I think was clearly the big outperformer. Consumer names did well. Private sector banks still continue to deliver and outperform the market. You still have a few pharma names. So I still think it's very, very well spread out. I mean, technology optically has not done well, but TCS again as a stock has done extremely well. So I think it's across the board, whether we're talking of these sectors being India-centric, dependent on the domestic economy, or are proxies for infrastructure growth, or they are basically sectors which are earning revenues in dollars and have benefited because the dollar is appreciated. So I think it's across the board. And probably that's something which will clearly be there. And therefore, it's really hard to say that whether it's this one particular sector which will, do well or not.
Hiren, if you really have to map the market internals or any market, there are 3 things which drive any market. Sentiment, which is mixed, liquidity, which is strong, and third is earnings. What are your thoughts on earnings for the quarter gone by and then for rest of the year?
I think Q2 was quite mixed, and I think on the whole it was good in the sense that we've not had any major misses or big upgrades. I think that according to me, if you look at more from a macro perspective, I think earnings degrowth is bottoming out very clearly, and I do expect that Q3 and Q4 should be better than what Q2 was. So I think personally that we are towards the end of the downgrade cycle. I mean, there could be a few odd companies which could have a problem.
So is there still money to be made on names like Titan as well as Tata Global Beverages, which have had a good performance? Would they continue to do so?
Yeah, I think they are too different. I think as far as Tata Global Beverages is concerned, I think it's a long-term re-rating story. It's not going to happen overnight. Obviously, there's been the core numbers have been very good, and then on top of that, there is this whole Starbucks thing which has come through, and I think people are now sitting and realizing that what this could do probably 3 to 5 years down the line when that becomes a big business.
You did talk about the mid-level stocks wherein you have seen earnings growth, but the stock prices haven't appreciated that much. Give us a color on what exactly is it that you like out of that mid-basket.
No, for example, we looked at one company recently, Motherson Sumi, right? I mean, they've always done very well, but they leveraged themselves to acquire, 2 large companies in Europe. That's a classical example of, markets were very apprehensive when somebody takes on a lot of leverage and acquires an asset because you don't know how it works. But I think something like this, if you look at this quarter's numbers, I mean, they've started to improve on the EBITDA margins. I think they are a great executor. Now, if you have a situation like that where you have $1 billion of debt on the books, but if you think that the management is good enough to create value in the asset that they've acquired, there's a lot of money to be made. I mean, next year probably they could do 30,000 crores of top line. At 10% EBITDA, they'll do 3,000 crores of EBITDA.
Nilesh, so what are your key assumptions for next year? And at the current juncture, what is your current portfolio strategy?
I think the key assumptions for next year would be that the broad assumption is that commodity prices have a good chance of being on a downtrend. I think you've clearly seen commodity prices kind of peak out, and it's quite possible that over the next 12 months they could be lower. Therefore, inflation could be lower, and therefore rate cuts could start and be a lot more aggressive. I think this is really the core of it. In addition to that, one also believes that clearly the government's UID program, Aadhaar, etc., will really gather full momentum, which means more money in the hands of consumers, particularly in rural areas, or so to say Bharat, if you may want to use that term, and maybe some more giveaways, given that 2014 is the election year, and maybe therefore there'll be more giveaways, there'll be more money which will get passed on to individuals and individual households. I think these are broadly the set of assumptions that I would assume, and therefore I think it would probably be the beginning of a new cycle for both corporate India as well as for households and consumers.
Are you betting on cyclicals? Are you betting on PSU banks? Because if the cycle reverses, they will be the first ones which will benefit.
I think in PSU banks, I think the big issue still is asset quality. And honestly, I mean, it's hard to really kind of arrive at a particular number that what would really be the gross NPAs or the net NPAs of some of the public sector banks. But I still think that the problem of asset quality is relatively sticky for PSU banks. And I probably think that it's a bit early. But maybe the names to really ride would be, say, a name like Mahindra & Mahindra for somebody who's really a institutional investor or a large cap investor. I think clearly it's a good play on Bharat. They're very focused in terms of what they're doing in the auto segment. The SUV side has been doing extremely well for them. Of course, the core tractor business is there. And then of course, it's a holdco for many other operating businesses, which are a proxy to basically Bharat or the consumer space, and where valuations are still very, very attractive. So I think a name like that really would benefit because of a lot of these assumptions going right, whether rate cuts happen, if commodity prices come down, if there's more money in the hands of consumers. I clearly think that from a very comprehensive perspective, a company like Mahindra & Mahindra stands to benefit disproportionately if all these assumptions were to turn out to be true.